You work hard. You save your money. You deposit it in a bank. You buy insurance to feel safe. But what if the very systems designed to protect your money are quietly getting rich because of you? Robert Kiyosaki, author of Rich Dad, Poor Dad, is known for challenging traditional financial advice. He often says, "Savers are losers," and that statement shocks millions. According to Kiyosaki, banks and insurance companies don't exist to make you rich. They exist to make themselves rich. What really happens when you deposit money in a bank? Most people believe that when they deposit money in a bank, the bank simply keeps it safe. In reality, the moment you deposit your money, it is no longer just sitting there. Banks use your money to lend other people, lend to corporations, invest in financial markets. This system is called fractional reserve banking. You deposit 100,000 pesos. The bank pays you maybe 0.1% interest, but the bank lends that same money at 6%, 10%, sometimes even more. Your money works hard, but who gets most of the reward? Kiyosaki argues that banks reward saving but punish it through inflation. If inflation is 6% and your savings earn 1%, you are losing purchasing power every year. From Kiyosaki's point of view, banks get rich using your money, while your money slowly loses value. Now let's talk about insurance. Insurance is sold as security, peace of mind, protection against the unexpected. But Kiyosaki asks a different question. If insurance companies always lost money, why are they so profitable? How insurance companies make money? Insurance companies collect premiums monthly, invest those premiums, delay or deny payouts when possible, bet on the probability that many people will never claim. In short, they collect from many and pay out to few. Kiyosaki is especially critical of traditional life insurance. He argues, you pay for decades. You may never benefit. The company invests your money the entire time. From his perspective, insurance companies get guaranteed cash flow, while individuals carry the long-term cost. But here's what Kiyosaki critics point out. Banks and insurance are not evil by default. They provide stability, risk management, liquidity, emergency protection. The danger is not using banks or insurance. The danger is not understanding how they profit from you. Robert Kiyosaki's real message is not don't use banks or don't buy insurance. His message is don't let your money sleep while others use it to get rich. He encourages financial education, understanding assets versus liabilities, knowing where your money actually goes. So the next time you deposit money or pay an insurance premium, ask yourself, who is really benefiting the most? Because in the modern financial system, knowledge, not money, is the real currency.